Morning.
Hi, Ekta, good morning. So nothing at all, right? I mean, it's, as you said, ho-hum kind of a day. So what I did was took this opportunity to look at a sector where I think one can really find opportunities, which is IT. Two things, stocks haven't moved at all, and stocks compared to historical valuations are trading at very low levels, right? Large companies, TCS, Infosys, etc. I'm talking about IT right now today in the context of what's happening to the rupee. The rupee is now making newer lows, etc. I went back and looked at 3 previous episodes of rupee depreciation, large rupee depreciation, to check whether IT stocks have outperformed. Let's go straight into it. Episode number 1, between March 2008 to March 2009, the rupee fell. The rupee fell 25%. The rupee went from 40 to 50. Right? 25% depreciation in the rupee. The IT index was down 36%. The Sensex in that same period was down 38%. That was also, of course, the global financial crisis. Episode number 2, that is between June 2011 and June 2012. The rupee fell 21%, 45 to 54 on the rupee. The IT index was down 5%. The Sensex was down 7%, right? 21% fall in the rupee. IT index down 5%. Third episode, the third period, April 2013 to August 2013. And this is interesting. The rupee falls 16%. The currency goes from 54 to 63. The IT index is up 16%. The Sensex is down about 1.3 odd percent or so. What is the takeaway? I mean, you know, the previous 2 episodes that I pointed out, rupee down massively, IT index, IT stocks also down. In this episode, rupee down quite a bit, but the IT index far outperforming the Sensex, the broader market. I think the way to explain this discrepancy is useful to gauge whether stocks will do well in the current context of rupee depreciation as well. So a couple of points I want to make. The broader context matters. I mean, I think one has to ask the question, why is the dollar rising? If the answer to that question is it's flight to safety, I think, I mean, then if you look at episodes, and not just these 3, I looked at others as well, we're just putting out 3 for the viewers. If the answer is it's flight to safety, and that's why the dollar is rising the way it is, and other currencies are depreciating, less of a chance that the rupee, that IT stocks do well. I mean, things improve demand-wise for IT. Because remember, rupee and the currency is just a small function. I think revenue growth, etc., matter far more. Dollar revenue growth matters far more over a period of time for IT stocks. If the question is dollar rising because the prospects for the US market is improving, as is the situation right now, is growth in the US going to pick up, etc., then I think you have a far stronger case that IT stocks actually do well. What is standing between IT stocks now and them doing well? I think it's Mr. Trump and his policies on things like H-1B visa, etc., which are unknown. By the way, the nominee for the Attorney General, which is Jeff Sessions, is known to be a critic of H-1B, etc. So I think one will have to keep that in perspective. But I think it's one sector, large free cash flow generation, valuations much below sort of historical levels, the rupee on its side. Let's see. I mean, I think what they can do at this point. I'm not even getting into the business side of things, how much disruption is happening, whether they'll be able to save the margin gains that they're making because of rupee depreciation, or will they have to pass it on to clients over a 2-3 quarter period. I'm not getting into that. I'm just looking at simply what the rupee has done, what stocks have done, and the factors which might be driving the performance.
Okay, so that's on the IT space. We're going to be talking about many more stocks within that space.